When it comes to the smart money, you're probably thinking a smoke-filled room with some older men in top hats, or maybe in just suit and tie in this modern age. And they're sitting around talking how they can go ahead and screw over the common working people and steal all their money. Well, that's a common stereotype. But what if we could go ahead and virtually listen at the door and hear what they're talking about, especially right now that we're hearing about tariffs and whatnot? What exactly are they doing? Well, it turns out that there's actually a better way to do things because unfortunately, I don't have access and the key card to go ahead and eavesdrop these days on that kind of conversation with their bodyguards and everything else. So there's something that works just as well that is really counterintuitive. And that is looking at what the dumb money is doing and then do the exact opposite. But why? Where are the lines on the charts and where are the chart patterns and all that stuff? No, no, no. We're not going to do any of that stuff. So this is a strategy that we're going to look at. This is a long-term strategy right here. I call it the smart money indicator, but it's kind of a misnomer. I'm going to tell you all about it and why this thing has stood the test of time. So I started messing around with this in 2000, and then by 2006, I programmed my fingers off and spent a good weekend with my office door shut and figuring this out. And since 2006, it's been completely systematic. And I even have an old video where I'm on tape it was April 1st or 2nd. I remember it was a Friday. I got this report and my buddy was really distraught because he had just liquidated his 401k because he needed the money. And I didn't have the heart to tell him that I'd just gotten the biggest buy signal ever with this smart money indicator. So let's go ahead and talk about how it's positioned right now and how it was in 2020, because that's very relevant to what we're talking about. But first, let's go ahead and talk about like what exactly it is, and then I'll get into the formula. So the government, through the CFTC, they monitor futures positions, and then they legally require people that have over 1,000 contracts in the E-mini S&P 500 to report exactly what they're doing. How many contracts long, how many contracts short. So we'll go over here to the CME, short format, and I'm going to scroll about halfway down. And this report is released every Friday, just about, unless there's a holiday, at 12:30 p.m. Pacific. They're usually really good at updating that, except for during COVID, not so much. So we have the E-mini S&P 500. This is the tail that wags the dog. So you have up to 50 to 1 leverage, and you better believe this completely changed the market dynamics and how markets work forever. And originally it was 500 to 1 leverage in 1982 when they were released. It was crazy. And it's also responsible for the 87 crash. I have the receipts to back that up as well. So what have they been doing this past week? Well, this is last week's report. And they got rid of a bunch of longs. So they were selling into the decline by about net 10,000 contracts. That's a whole lot of loot. And you can see that it's these non-reportables that matter the most. This is the dumb money. These are the people that are not required to report. They're not commercial. They're not non-commercial, large traders, anything like that. None of that works. I've looked into the Commitment of Traders report, which this is, ad nauseum. And this is really what it is, and bonds too. I'll get into that in just a second as well. But I think the S&P 500 is much more popular than stodgy old bonds, but it makes a big difference actually in the grand scheme of things. Let's see exactly how the dumb money is positioned the past few weeks here. Okay, so we'll click on the symbol here. We're in Portfolio Boss, and you can see that the dumb money has been selling hand over fist. So far, they've been right. But I'm telling you, at major turning points, these people are the worst traders imaginable. They are not professional traders. These are just your mom and pop. You can see that this is huge. And I'm starting to wonder if we are going to see the biggest buy signal since 2009. Because this is a big, big selling wave over here, and these people are just very rarely right. Okay, so I'll zoom in a little bit more again. And you can see, so this indicator has been underperforming a bit for the past couple of years. And the reason why is because when it's not in stocks, it gets into bonds. And so we'll take a look. Let's see how bonds have been. They've been performing terribly. And I'll just make this a line chart here. And if we look and see, boy, bonds just fell off a cliff. So there was that period of time for a couple of years where it went into a bear market. So the returns suffered a bit. But now, what is it saying? If we look on the chart again, it's on a buy signal. The same thing happened in 2020. There was a big shock, COVID, the reaction to COVID and all that craziness. You remember that 5 years ago. It's still very fresh in my mind. And it's been on a buy signal over here. So that means when you see all these really weak hands over here are out of the market, that means strong hands are buying. And so what do they call them? The kids call them diamond hands these days that are trading crypto and things like that. These are the whales that are holding right now. So effectively, the people that are taking the other side of this trade are going to be the smart money. And so they are effectively buying this decline. So that's why I believe that this is not Armageddon and that this will resolve in, this will likely be very, very close to a bottom here. I would love it just if the markets would horse around and then go straight back up, because I think that that is entirely on the plate and people are way too bearish right now. So if there's no one left to sell, the market can only get up. Okay, let's go ahead, and also there's one more thing I need to share with you, is that there's a smart money for bonds as well. Let's check out and see what's going on with bonds. If you bought a house, you might be interested in what I have to say right now. What's going on with bonds? Are interest rates going to go lower? And you can see that this green line right here is the historical back test, right? Hypothetical. This strategy has been live for, I think, since 2016 is when I noticed this. So this is actually the opposite. This is actually the smart money. So when you analyze the 10-year bond market, when these people are buying in mass, then it's usually going to be a bull market. So this is the price of bonds right here, long-term bonds. That's fallen off a cliff, basically. And the strategy has definitely outperformed over here. There's a big spread between the two. And let's go ahead and take a look. What's going on? You can see that the smart money is actually buying right here. It's the same thing. It's these non-reportable people. But for whatever reason, they're the smart money. So I try not to ask too many questions on this. I don't know exactly why. I don't have the story to tell you. I just know what works through empirical research by back testing my assumptions. I actually tried it the opposite way, and it was a terrible looking. It was so bad. The equity curve was falling straight down. I'm like, what if I just reverse the rules and my sells are buys, my buys are sells? And clearly that's actually what worked. So there's been a buy signal over here on the old Twitter. I've got a presence on Twitter as well. Don't tweet that much anymore. I'm trying to get more traction on YouTube over here. But I was saying over on X that this was just the tremendous buy of the century over here. So I think that bonds are going to go up, which means interest rates go down. So hopefully you'll be able to get a little better deal on that house you recently bought if you were a recent buyer. Holy cow. And by the way, don't forget to click in the description underneath here and click on the link and get a copy of my cheat sheet over here. And I will introduce you to my world, which is the world of weird stuff. It only costs $6.2 million to build all these AI research tools. It's like a, what a deal, right? You get this information for free. And I sick the machine learning on all this weird data and then see what it turns up. And I'll tell you what, it's like finding a needle in a haystack. It finds all these weird, looking through the data, finds how the plumbing works underneath the surface of the markets, who's moving what worldwide. And believe it or not, that's what signals so many great trades on stocks across the board. And just to be a nice guy over here, I'm going to go ahead and tell you what's going on with Nvidia, because that is the #1 retail traded stock in the world and certainly could benefit from AI. And I'm sure we would all love if this tariff stuff wasn't going on right now. But I'm going to hit start. And it got out of the inverse fund of PSQ and got right back into Nvidia on Thursday. All right, peace.